Worldwide, diesel's upset. Why is diesel, that goes in my ancient VW Rabbit, why is diesel topsy-turvy?
Well, absolutely, because it's the least market where you'll see a margin for refineries. So a refinery, their goal is always to maximize the amount of gasoline that is being produced. So distillate or diesel fuel always comes in second place. Now, with the way they've shifted from a government policy, from a taxation policy, there is a market that is under strain. Right now, we're going into the peak demand season for diesel fuel. So you have intermodal demand here in Los Angeles, in Southern California, with all of the freight that comes into the ports of Long Beach and Los Angeles. Those goods have to be shipped to shelves to get ready for the the Christmas season. We also have the harvest now in the Midwest, so there's a tremendous amount of demand for off-road diesel. Supplies are just really low, Tom, and when you have low supplies, high demand, there's only one way for prices to go.
I believe oil's up, and the Steve Schork world is not up as much. Do you just assume a gallon of gas catches up with where Brent crude is?
Absolutely. And what's scary about this, Tom, is we're now consuming winter-grade gasoline. This is a gasoline that has a higher vapor pressure. It is cheaper to manufacture, and yet prices are at record highs for this time of the year at the pump. I'm afraid now, with the situation we're seeing in supplies, crude oil supplies at the NYMEX delivery hub in Oklahoma, we're at very low supplies. There's going to be a tremendous strain on the market, already is. We're seeing it now in the front end of the curve, a tremendous amount of premium called backwardation. Today's price is greater than next month's prices. It's a clear signal that the market is undersupplied. There's too much demand. And again, we'll need prices to go even higher here to even out and bring this market back into equilibrium.
Stephen, are you saying this is almost like the opposite of what we saw back in the pandemic?
Yeah, absolutely. That was a situation where you couldn't put any more barrels of crude oil into the delivery hub, and hence owners had to pay to get that oil out of there. So right now we have a situation where over the past 3 months, oil inventories at the NYMEX hub have been slashed in half. Now we're only at about 21 million barrels in those tanks. The capacity is closer to 80 million barrels. The problem here, Jonathan, is we're only about 2-3 million barrels away from what's called tank bottoms. Tank bottoms is the sludge at the bottom of the tank. So we are now really plumbing the dregs. And that is a concern because there's already issues with regard to the quality of that oil. So if we don't have that quality oil sitting in tank, or we're draining whatever is left there, and what we're seeing on the front of the curve, there certainly is an incentive to take even more barrels out of cushion. Then it gets into an issue of quality over quantity, we'll have neither. And once again, that's sending a tremendous ripple through the market and helping to support prices and making a case for oil prices going to and above $100 a barrel through the end of this month and certainly by the end of this year.
So, Stephen, just help me a little bit more to translate some of this stuff. When we saw that data out of Cushing earlier this week and we heard that phrase, operational lows, is that what you just described?
Yes, absolutely. So in any tank, you can't drain it down all the way to the bottom because there is that, it's called BS&W, basic sediment in water. And this is the stuff that kind of floats to the bottom and just sits there. So you have to have a level of oil above that. Operational levels, the sales line is another way to call it. And once we get down to that sales line, and we're pushing up against it right now, you're running into an issue is we don't have enough oil sitting in tank right now.
Stephen, I look at where we are and all the micro analysis that we do. Do we have an energy policy wrapped around the Schork report, 8 pages of distillate, what is New York Harbor, all this romantic oil, petroleum stuff? Do we have an energy policy arching over the Schork report?
I've been trying to search for an energy policy for this country for the past 2.5 years. Yeah. Unfortunately, I don't have a lot of confidence in the policy that we're seeing. And as we know, we have a head of the Department of Energy who doesn't even know how much oil we consume on a given day. This is not where their priorities are. So we do not have an energy policy. And therefore, you've got a tremendous amount of volatility, and it's better to own oil. And look, we know what it is. We're using the SRPR, that is the Strategic re-election petroleum reserve. We've robbed that reserve of 250 million barrels of oil, and yet gasoline prices today are 21% higher than when we started draining the barrels out of there. So, there is no policy when you don't encourage domestic production. You go to Saudi Arabia, Venezuela, you ask them to increase production, and yet we have what we have right now. So, there is no policy. I think they're making it up as they go along.
Stephen, there's one number that contradicts some of that, though, and it's 12.9 million barrels a day of production in America. We're close to all-time high, Stephen. How's that happening? How are we having these problems with that happening?
Yeah, because it's not necessarily about oil, and this is the mistake with taking crude oil out. You and I, we don't put crude oil into our cars. We put gasoline into our cars. We put diesel into our trucks, so forth. So the problem is not necessarily oil per se. It is our ability to refine that oil into what we need, and that's what we don't have. We do not have enough capacity to make enough gasoline, to make enough distillate fuel. So right now, to your point, the industry is doing everything it can right now. 12.9 million barrels with these prices. I'm sure we're going to go up over 13 million barrels in the weeks ahead. Production, the refineries are running at over 91% capacity. That is at the very seasonal high for this time of the year. And we are churning out an above normal 1.11 gallons of gasoline for every 1 gallon consumed. So the industry is doing everything it can to get supply to the market. But again, we are stranded because demand is outpacing that capacity to make more gasoline, more diesel. So what happens? We have to import it. And of course, when you're importing, you have to pay transportation, and that's an extra tax on the commodity.